This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices edged higher on Tuesday, recovering earlier losses, as tight global supply and an expected pickup in demand during the U.S. summer driving season balanced concerns over a possible recession and China's COVID-19 curbs. The European Union is moving closer to agreeing a ban on Russian oil imports. Such an embargo is likely to be agreed within days, Germany's economy minister said on Monday. That of course would put additional upward pressure on seeking alternative supplies, said Andrew Lipow, president of Lipow Oil Associates in Houston.
The energy security crisis since Russia's invasion of Ukraine must not lead to a deeper dependence on fossil fuels, International Energy, IEA, Chief Fatih Birol said on Monday. The right investments, especially in renewable energy and nuclear power, mean the world need not choose between energy shortages and accelerated climate change due to fossil fuel emissions, Birol said at the World Economic Forum, WEF. We need fossil fuels in the short term, but let's not lock in our future by using the current situation as an excuse to justify some of the investments being done. Time-wise it doesn't work and morally in my view it doesn't work as well, Birol told delegates in Davos, Switzerland.
Moving on to the top news in the energy sector.
The European Union plans to start jointly buying gas before winter, the bloc's energy policy chief said on Monday, as it seeks to cut reliance on Russian fossil fuels and build a buffer against further energy supply shocks. The European Commission, the EU's executive arm, last week proposed a plan for how the bloc could quit Russian fossil fuels by 2027, by speeding up investments in renewable energy and energy savings and switching to non-Russian fossil fuels. Russia, which supplies 40% of EU gas, since its invasion of Ukraine has cut off supply to Poland, Bulgaria and Finland, after they refused to pay for the fuel in rubles.
U.S. President Joe Biden has not ruled out using export restrictions to ease soaring domestic fuel prices, U.S. Energy Secretary Jennifer Granholm said on Tuesday. Asked if the United States was considering restricting petroleum exports to ease fuel prices, Granholm said, "I can confirm the president is not taking any tools off the table."
Next, we have the top news in metal markets.
Copper prices are likely to move lower before stabilizing due to worries about a slowdown in top metals consumer China and other major economies. But analysts say the long-term outlook is still strong due to lack of investment in new mines and demand generated by the green energy transition. Many analysts have trimmed their price estimates as copper slid by nearly a fifth over about 2 months after touching a record high of $10,845 a ton in early March.
Global crude steel production in April fell 5.1% from a year earlier to 162.7 million tons, World Steel Association data showed on Tuesday. Crude steel output from China, the world's top producer and consumer of the metal, dropped 5.2% to 92.8 million tons in April, the data showed. We will now look at the top news in the agricultural sector. The European Union's Crop Monitoring Service, MARS, on Monday trimmed its yield forecasts for this year's EU wheat, barley and rapeseed harvests due to dryness and said significant rain was needed to avoid further yield losses. Developing drought in parts of Europe, including in top EU grain producer France, has unsettled an international market already grappling with loss of Ukrainian supplies due to Russia's invasion. In a monthly report, MARS lowered its forecast of the EU's 2022 yield for soft wheat, the bloc's biggest cereal crop, to 5.89 tons per hectare from 5.95 t per hectare projected last month.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.